Hello and welcome to Crypto Weeklies. In this video, we discuss Tron and its ticker TRX, none of the content financial advice. The reason we are discussing Tron today, now 31 cents price, is one of the reasons. Again, it's this chart over here on my website, cryptoweeklies.com, link on the bottom of your screen. This is the portfolio gem portfolio analyzer or portfolio builder analysis over here. This trend or the terminal helps identify the cryptos which are in the gem zone, typically classified by lower volatility and higher annualized returns since 2021. So Tron leading the pack with respect to the returns in this gem zone, return 48% annually. You can see this from the chart as well. The monthly chart speaks volume. Again, this is the Tron chart since 2021. You can see over here the price has been in a massive uptrend, parabolic uptrend, whereas you can, even if you compare this with even Bitcoin for that matter, again one could make conclusion that the downturn for Bitcoins were much severe than the ones were for Tron, especially since 2021 began, and the price is much closer to the previous highs or the all-time high than for Bitcoin. So for example, over here August 2025, the price was at around 36-37 cents. Now it's at 31 cents. So still hovering, and in terms of Fibonacci level, this becomes more clear. So it's still from that 2021 high perspective, the price is at higher than 1.618 fib level, which is at around 26 cents if you toggle this with even with Bitcoin. And if you take the Fibonacci scale analysis from 2021, what you will find is 1.618 for Bitcoin is at around $101,000. Price is at around 72k. Toggle this with Tron from that 2021 high to the 2022-2023 bottom. The price is above the 1.618, much above the 1.618 than even Bitcoin, which is the flagship crypto in the asset class. Again, you similar analysis 2021 November to 2022 November bear market perspective, the 1.618 is 101k. So coming back to Tron, not spending much time on other cryptos right now. So what makes it a gem in the asset class? Again, typically identified by lower composite risk score. Again, Tron has the lower composite risk amongst all of its peers at 0.26. The next best is Toncoin. Third best is Bitcoin. So the overall composite score is calculated by 5 factors: the alpha and Sortino ratio, volatility, beta, and max drawdown. So the higher the score, the more risky the asset. Again, that's why ideally wherever the price for these assets goes, the composite risk based ranking makes more sense to identify the opportunity cost with respect to the risk reward for any particular crypto. I'm not saying that Tron will always be number one in terms of the composite risk score ranking, but it's highly evident from the charts thus far that Tron since 2021, with annualized return of 48% and volatility of 69% and Sortino ratio of 1.33, which is again comparison of return versus drawdown risk, it's the closest to the 2 level, which is considered excellent. Compare that with Bitcoin, the Sortino ratio is half of Tron at 0.65, return is less than half of Tron at 22%, volatility is 53%. Even ETH, again for that matter, is again at the boundary of the gem zone with much lower returns, much higher volatility. So that's where Tron is right now with respect to the asset class and its discussions. Right now, Tron as a composite risk is the highest of the asset class. That means it's not in an accumulation zone. One reason or one way to visualize this is at around anything less than 0.3 is typically accumulation zone in the bear market. One way to visualize this instead of just a flat score is the relationship between the price of Tron and the 200-week simple moving average. The 200-week simple moving average is this blue line over here, is 16 cents. And typically in the bear market, like it in 2022, price tends to correct to the 200-week simple moving average. The relationship between the price and the 200 moving average gets tested again. If the price holds a 200 week as support like it did in 2022, then another major trend kind of emerges. If you compare this chart with Bitcoin as well, again you will see striking differences. In 2022, Tron held 200 week simple moving average as support. Bitcoin didn't. Bitcoin went below the 200 week simple moving average. And not even that, even further lower than the 200 week simple moving average, as low as about 300 week simple moving average, this green line over here in the 2022 bear market starting June 2022. And this trend did not close out till about October 2023. Compare that to Tron. 200 week held as support in that November 2022 drop. Did not get challenged that much in 2023, just one week down in March of 2023 and then up from there. Again, this trend this relationship between the price and the 200 week simple moving average in the later half of 2026 might come into question, and some correction down to the 16 cents or whatever the price at that point for the 200 week simple moving average could be closer to 20-25 cents depending on when it gets to that level. If we were to extend that or extrapolate that 200 week simple moving average with not much of a steep inclination, you would see that towards end of October 2026, this 200 week simple moving average could be close to 23 cents. So a price correction to that level with respect to other regression based models signifying that trend could mean that the price action has come lower than the fair value. Right now, per the diminishing decay model, right now the fair value for Tron is at around 40 cents, but it's not as undervalued at this stage of the bear market like it was towards that end of the bear market where the price came close to that green line over here. This line came and held as support in that February 2026 drop. I don't imagine that this green line providing much support throughout the 2026 year. Maybe the price has to correct to this level at one point, which is currently coming in at around 29 cents. I'll get rid of these other lines for you to see it clearly. This green line might come into question with that drop to 21-22 cents as mentioned by the 200 week simple moving average price based analysis. Time weighted average price based risk levels. Again, this model helps identify what is not just the simple moving average price based interpretation of a fair value, but where the asset has spent its entire life. This is all of the days Tron average price for all individual days where Tron was traded as an asset since 2017, and the white line over here informs the time weighted average price, which is a price where the asset has spent its entire life. If the price has come close to the time weighted average price, like typically towards the end of the bear market where the risk levels are less than 3, for example over here, that's when accumulation makes the most amount of sense, where entering at a level where the asset has spent very little time, typically low risk in risk level 1 to 3, towards the end of the bear market drop in 2022 and initially in early 2022 and in late 2022, as well as couple of days in 2023, the price risk levels were in this risk level 3 or below, and one could make a case for risk level 4 to be also included in this in the pursuit of keeping the longer window for the accumulation rather than accumulating at the very bottom. No model can predict the bottom to a dot, but what matters over here arguably is the zone where the asset price has come down so much that it is trading closer to its natural state, or what you can say the baseline value that has been created with over years of trading, rather than borrowing from future and increasing the mathematical probability of mean reversion, which typically occurs when the risk levels are higher than 7-8. Right now it's risk level 8. It's highly risky to accumulate. As of now, the difference between the price and the time weighted average price is greater than 229%. The time weighted average price is less than 10 cents. I'm not saying that the price has to come and mean revert to that 10 cents level. As you can see that right at the bottom of the 2022 bear market, there was a difference of about 12% between the price and the time weighted average price at the bottom. This time around, that difference could also increase to, let's say, 20 to 30%. And by the time the time weighted average price gets closer to 15 cents, a 30% on 15 cents or 33% on 15 cents is adding another 5 cents. That's 1/3 of 15 cents. Then the bottom could be well close to that 20 cents level. 15 cents, which is again the extension on this time weighted average price, assuming that the price stays so far above the time weighted average price, like that it puts the price action pulls the time weighted average price as a magnet to the upside, like it did over here, where there was this inflection point where the price rose so much that the time weighted average price had to climb with it. So these things could happen in 2026, but right now, as the price is in risk level 8 per this time weighted average price model, accumulation does not make much sense at this point per this model. So one model saying the bottom is closed, the DK model that we saw, whereas the time weighted average price is warning that the risks are far elevated. The technicals based model, or the normalized risk based on these key averages, say that the price is not close to the bottom. It's at around 0.34 risk. This is the 20-week, the 100-week, and the 200-week simple moving average price based normalized risk. The normalized risk is in this purple shade over here, available since 2021 when Tron completed its 200 weeks, when the red line started becoming visible, that is after completion of 200 weeks. So right now at the bottom, as you can see, in November 2022, the normalized risk was very low as the price came very close to the 200-week simple moving average. So the deviation between these averages mark the normalized risk levels. And this is again all live models. You can check it out throughout the course of the bear market to see whether Tron has entered in that accumulation phase. If we go by the machine learning based or the time series forecasting or machine learning based model to identify where could the bottom be for Tron, let's say if the downturn continues for 6 months for Tron, the support is at around 16 cents, with that being that being close enough to the time weighted average price, as well as the regression based interpretation and the 200-week simple moving average price based current valuation of the 200-week simple moving average price being at around 16 cents. That's the worst case scenario if there is a 6 months of downturn. If let's say we go by only 3 months of downturn, let's say from mid-April to mid-June, that's scenario where the price action could find support at 20 cents level, which again, that zone of confluence between all of these individual risk-based models signify that there could be a drop to that level. In terms of estimated bear market drop for Tron and its ticker TRX, right now the price at around 32 cents, offering very little relief with respect to the time weighted average price. The base bear case for Tron with respect to all of these individual risk-based models is 15 cents. If something worse happens, right, like a recession or a panic drop, then we can discuss the other scenarios. But for now, 15 cents becomes the base bear bottom for Tron. With that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.